Sometimes it feels like news about the Middle East is just background noise, something distant, chronic, almost familiar. But as tensions around Iran rise, the entire world suddenly remembers. The global economy stands on a very fragile foundation. That foundation is energy. And if you look at the map, it becomes clear just how fragile the system can be. At the center lies the Strait of Hormuz, a narrow stretch of water through which an enormous volume of global oil supplies passes. It is not just a geographic point, it is the nerve center of the world economy. Now imagine fear beginning to build. Headlines grow harsher. Warships appear in the frame more often than oil tankers. The market does what it always does in moments of uncertainty. It starts pricing in risk. Oil prices react not to the fact of war, but to the possibility of its expansion, to the probability of disruptions, to fear. And fear is the most expensive commodity in the market. But the main question is not whether oil will rise by 10 or 20%. The deeper question is this: can this conflict change the very architecture of global energy? The world is already living in a state of transition. We hear about green energy, decarbonization, reducing dependence on hydrocarbons. But the reality is this: oil and gas still power industry, transportation, logistics. They are the bloodstream of the system. Iran is not just an exporting country, it is a center of energy geography. Its position is strategic. Even if sanctions limit its participation in global trade, the region itself remains a key source of affordable oil. And this is where things become most interesting. Every time tensions escalate in the region, the world does the same thing. It begins searching for alternatives. Europe speaks about diversification. Asia strengthens long-term contracts. The United States more actively uses its export potential. But the paradox is that a crisis does not always weaken oil. Sometimes it strengthens it. When prices rise, production in other regions becomes more profitable. New projects are launched. Investments flow into shale fields, deepwater extraction, LNG infrastructure. The world does not abandon oil. It simply redistributes sources. A conflict around Iran could become a catalyst for precisely this process, not a sudden rejection of the Middle East. That is impossible in the short term, but a gradual redistribution of influence, more expensive energy, more complex logistics, more politicized contracts. And this is where the domino effect begins. Rising energy prices mean pressure on inflation. Pressure on inflation means tighter central bank policy. Tighter policy means pressure on stock and bond markets. Suddenly, a regional conflict becomes a factor influencing mortgage rates in Europe or the cost of business loans in Asia. Geopolitics stops being background noise. It becomes part of the financial equation. Now let's ask, will this accelerate the energy transition? On the one hand, yes. Every new crisis strengthens the argument for solar, wind, and nuclear power. Energy independence becomes not an ideology, but a survival strategy. On the other hand, high oil prices make traditional extraction even more attractive. Companies see profits, investors see returns, and capital flows back into hydrocarbons. This contradiction defines the future. So, will the conflict change the global energy balance? Perhaps not in the form of a sudden upheaval, but it may accelerate processes that are already underway. Market fragmentation, supply diversification, strategic thinking instead of blind faith in globalization. Sometimes the world changes not because of a single shot, but because of accumulated tension. And if the conflict around Iran becomes prolonged, it may not destroy the energy system. It may reshape it. More cautious, more expensive, and far less naive.